Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scouten, jumping into the charts on this October 10th, 10:10. Essentially what had transpired today was the indices have been under pressure all day, but since you made a low in the mid-morning, the indices have been trying to rally. You can see here's the low that the S&P made, the SPY, around 357.79, give or take a little bit. And it has pushed off the lows, and it's looking to close inside of the Friday's downside candle low. So that is a little bit of a short-term bullish indicator, considering that yields did rally today, and the dollar also did rally today. The S&P did not take out the low that was made here on September 30th. So that's interesting. And then it's also interesting that you're trying to close back inside above this June low. So you can arguably say this is when interest rates hit their highs. And today we actually tested really the double top in interest rates. So the fact that this was peak hawkishness and you made a low, and the fact that the interest rates again touched that double top zone and have looking to slightly consolidate, you do potentially have a little bit of upside before this market heads lower. So short term, maybe a little bit of positives that you did close off and made a little bit of an intraday reversal, bullish engulfing reversal, and now you are consolidating bullishly. The question is, can we maintain this momentum? Obviously there's a level that we're watching here. We really don't want to fall back below this trend line. You could come back down and retest, but you want to hold this consolidation to potentially move higher. So that's kind of what I'm looking for. Another interesting thing is if you drew a little bit of intraday dropping a parallel, you can see why this was our little bit of a fake out and you had a little bit of a reversal, but you never ever really confirmed below this intraday parallel channel, and you had this reversal to the upside. Now there is going to be resistance at the top of this channel, but I do think since you're consolidating, as long as you hold this, you could potentially move higher and test these pivots here at 365. You will have resistance at 364, the sell-off zone, but I do think that's marginal and you could get through that if the markets catch a little bit of momentum. Now obviously, you can see as the intraday spiders are ticking down, let's flip to the intraday DXY. So you can clearly see it's kind of an inverse pattern. You know, this is kind of making bullish consolidation, and so is the SPY. And it's a matter of which way is going to break. Is the dollar going to break up? That'll push the SPY down. Or if the dollar fails, that'll push the SPY up. So right now it's kind of just mirror image trading of each other. Let me flip back to the SPY. As you can see, that same little bull flag pattern. So it's really key to watch the currency markets. And you can see that the dollar has had, since you made this big sell-off here, you have had 1, 2, 3, 4 days of continued upside, which is pretty impressive, so to speak. And I just want to use the 4-hour time frame because that's kind of been giving us a little bit of intraday plus a longer term time frame. But on the intraday, there's nothing really wrong with the dollar. This is still continuing its upside bullish momentum. The only thing that could really stop the dollar, in my opinion, is if we take a look at the US, say, 2-year yield. We can see that interest rates pretty much hit that double top again. So if I flip to the daily, let me just go out of this mode. Interest rates have had a big surge. The big question is, are we going to stop at this double top and consolidate more before breaking up? Or are we just going to get rejected and start falling a little bit lower to the bottom of this range? If we get rejected, I don't think the dollar is going to make much more highs if interest rates or yields are starting to fall. So that's going to be the two things that we watch, whether or not yields continue to rally or if they fall. Obviously, we have CPI coming out on Thursday, so that is going to be critical for the market. Let me just take a look at the SPY again. It is falling here late in the session. So you can see that it's coming down to the bottom of the range. Now you really want to hold the bottom of this range, so it's going to be interesting to see what transpires. We did offload a few winners today, closing our day trade, our XOM day trade. So that was super healthy to see. Basically, we netted a pretty big score on that trade. You know, it was over 1,200 shares for a beautiful, I think it was about $1.60 or something like that. But if we look at oil, what has transpired in oil, you can see this downsloping parallel channel connecting your pivot here to your pivot here, a little bit of consolidation, breakout, another little bit of reversal point bounce here, impulse breakdown, another pivot, and you just hit that and you've pulled off delightfully. Now, can oil keep going lower? Yes, I do think it can, especially when you look at this volume coming in on the WTI. That is a pretty big volume surge on the WTI, which means that a lot of people have been buying this pullback and there's big money dumping into this. A lot of shares are being exchanged. Now, the upside bias, considering it has broken out, is still favoring continued upside, but let's just keep in mind that generally when you break out, you retrace back down to the level that you broke out of. So we're going to have to see if we get that retrace on oil and if it holds this level. I'm still in the camp that oil goes lower. That's why we're shorting, but we'll just take it day by day. Natural gas is teetering on the brink of this support. If you break this support line, there's lots of downside for natural gas. Even this next support down around this 515, 520 level would concern me, considering you are consolidating and getting a decent amount of consolidation, which could take you much, much lower. So you'd really want to see a straight shot into this level for it to be valid. But nonetheless, natural gas can always breach key technical levels along with any other asset. So we did basically continue to buy a few names today. We added to our VFC, added to Intel. Let's just see how Intel's performing, INTC. So we did add to our Intel, and you can see that it is coming in pretty hard here now, late in the session, but it is slightly off of the position that we added to so that's good to see slightly. Obviously, we added again to AMD. One of the reasons I'm adding to AMD is because you're still technically, despite you've breached this channel with that hard sell-off on Friday, I think we're seeing pretty much near capitulation in the semiconductors for the short term. I think we're going to see a rather reasonable bounce in the semis, just considering that you've seen this tremendous drop from, about 104 down to like 56 now, almost a 50% drop. And the reason why I think we're going to get a bounce is you've had this technical parallel channel, which you've been trading in since you made the all-time high back here, and then you breached it, but you have not confirmed below, which is one of the reasons why I think, considering we haven't confirmed below this channel, I think we're going to catch a little bit of a bounce in the semiconductors. And I would be really concerned if we do start confirming below this channel, but at this point in time we haven't. So this is still a massive, massive level of support. I wanted to show you on the weekly. Not only are we oversold on the weekly, which is basically a straight 1, 2, 3, 4, 5, 6, 7 out of the 8 weeks of straight downside, you're into these pivot tops over here. You've almost negated pretty much all of the money printing which was injected into the markets to get us out of this COVID slump. And then you factor in this long-term trend line going back to 2009. These levels, multi-year levels, do not get broken very easily. So we have to still respect them as support despite we're in a bear market. The market loves to dance around these levels and trick people over a day or two or three before it starts to make its move in the next direction. So I still think the markets are favorable for a potential bounce, especially since yields are at that double top zone, as well as the dollars had a fair move up to the upside. So let's just continue to monitor the semiconductors and see how they perform. Obviously, they did get pretty rocked today. Let's take a look at gold, GOLD. So gold was also under pressure today. You can see that it had a pretty big down day, down just 1.48%. Now the interesting thing is when you look at gold and then you compare it to, say, the GDX, gold was down 1.46 and the GDX was down basically 1.6. So the miners are still holding up better. You still have this downsloping trend line that you broke out of, a clear break and confirm on the miners. So typically, even though gold is falling and the miners did not fall in relative to their extra alpha that they provide, usually they fall on a 3-to-1 basis when the metal goes down itself. So the fact that basically they're even Steven on the day just shows you that there still is relative strength and that this is still a potential bullish technical setup over here. You could be forming now a beautiful, beautiful inverse head and shoulders here. So we're just going to have to wait and see how this right potential shoulder develops. But if you get this developed shoulder over here, then you're looking at a potential move of, say, let's just calculate this out. This is going to be a pretty substantial move to the upside. If you get a potential break, that would take you somewhere in the range of 36 30.62, and that would make sense because that's right where you had your hard pivot. You have your consolidation before breaking down. So lots of resistance in that level, but that would be a tremendous move, potential move to the upside, almost a 20% move if we can start to get that accumulation inverse head and shoulders pattern developed on the daily chart. So that's kind of one of the things I'm still looking for. Obviously with silver, let's take a look at silver. We did buy a little SLV today. So we got that retrace back to the first trend line, which is what we were looking for. If it comes back down a little bit, I'll accumulate a little bit more, but clearly being patient, you know, we almost missed it out on this rally over here, but if you're patient long enough, generally the price will retrace. This is still a very bullish pattern. I love that we offloaded, I believe, half our SLV, and then we offload our silver miners play, but now we're back in the miners as well. PAAS. So Pan American Silver, we added pretty much at the gap fill today, early in the morning, so that is awesome to see. I still love this accumulation pattern on the miners. I still think you have a minimum upside of 1891, and considering we already scored off of a decent sized position in our portfolio, we're ready to rinse and repeat this trade, and we're starting now an accumulation trade once again with a beautiful average after we just offloaded this position 1, 2, 3, 4 days ago. So that's excellent to see. Let's take a look at BTC. So Bitcoin is still meandering along the support sign. So we obviously are short Bitcoin and Ethereum. We're just short around this green line over here, so we're slightly in the money. The longer Bitcoin starts to trade back below this initial breakout trend line, this first one, that is not a healthy sign to see. And if the markets do get a technical bounce, Bitcoin can slice through this pretty easily because we are still consolidating inside two of these impulse move bars. If you look on the weekly basis, you're still holding these two weekly positive wicks, but nonetheless, Bitcoin is on kind of borrowed time here. There is a lot of potential that it doesn't even catch a little bit a technical bounce with the markets, considering it's kind of been doing its own things. And let's just be clear, the macro pattern is bearish, extremely bearish. I mean, if you simply look, it's been bearish for a long time now. You had this massive channel going back to its inception, which you've broken out of for the first time ever in Bitcoin's history, and you've cleared, you've confirmed it on a weekly basis. You've even had a retrace, which was rejected, and now you're forming weekly bearish consolidation inside a major bear flag, inside a major downtrend. So the pattern is running out of time here for the Bitcoin bulls. There is the Bitcoin conference that is going on right now, I believe, in Dubai. So that should be some bullish momentum for the price of Bitcoin. And if it really can't develop any bullish momentum, even with a Bitcoin conference going on, that is kind of your red flag there that Bitcoin's likely to fall, which is why we're shorting it. Now we still have that tight stop loss in case it goes higher, and even if it breaks out of this level, that'll be brilliant. We can get stopped out, we can let Bitcoin go to 24, 25,000, or even start accumulating a short here, just depending how fast it gets. But I would love to continue to short Bitcoin because at some point I do think we're going to get another leg down of at least 50% on the Bitcoin price. Let's just see if I can touch base on anything else at the moment. I'm just looking through what transpired here. So that's pretty much sums it up for today. Again, if we look at the QQQ, let's just see where we are. The Qs did make a new low, so you pierced the June lows and you also pierced the September lows. And that is interesting now because charts generally like to look for lower lows or higher highs before it makes the next move in the next direction. And considering you have had 3 sharp down days in the Qs, you've made a lower low, it does favor that you could potentially get a bounce back up to this 279 gap fill area, which from current levels would be a decent bounce in the Qs, just under 5%. And then obviously we'll have to reassess from there. Nonetheless, there still is this bearish head and shoulders pattern that has triggered to the downside. We have to keep that in mind. Here's your left shoulder, your head, your right shoulder. So the Qs still technically have more downside. You are coming into major support. So because the markets are still so oversold and now you're getting lower on the charts, and potentially as more and more time passes and the economy weakens, you're closer to that inevitable pivot, you are likely to get some pretty crazy intraday price reversals and bounces, and that's why the volatility is going to be pretty amazing trading it, even coming up to these next key support levels. So let's just continue to monitor day by day, see how the charts can guide us. But overall, it was another down day on the Qs, just down over 1%. So clearly with Microsoft making new lows, Tesla was under pressure, Apple was under pressure. But it is good to see that those stocks have finished basically off of their lows. So if we look at Apple, Apple put in a little bit of this doji. And the one thing about Apple is that obviously it's the heaviest weighted stock, the biggest market cap, so it has the most influence on the markets. If Apple's having a positive day, in most sessions the market is having a positive day. So with Apple pretty much finishing just slightly positive on the day, up 0.2%, nothing to sneeze at. But again, it's certainly positive to see that the biggest stock is potentially trying to carry this market for a little bit of a technical bounce before we inevitably head lower. And I still think there's a lot of technical gaps to the upside that do favor potential market bounce. You know, this one over here was so short-lived, which makes us think that it could be a 1 or 2 day bounce again, enough time for us to offload some of our longs and see what transpires. The SMH is really interesting because, again, it is also oversold into key massive technical support. Sorry about all my day trading lines, but when you see the SMH, you know, going from a high here to 245 all the way down, these are the kind of charts that you love to start accumulating at because they've made such a sharp move down in a short period of time, and the rate of change movement is slowly starting to put the probabilities in favor for that mean reversion bounce, which is what we thrive on. So again, congrats on the day trades, the ones that we did cover. That was a pretty big position in our portfolio for day trading wise. We're still short XLM via swing trade, so I do think that still has more downside, but we do have a lot more working capital now to continue to see if there's any other opportunities. Obviously, this week we start with bank earnings. So earnings season is approaching very quickly, and that should be really key because you have earnings season mixed in with the CPI print on Thursday, I believe. And then you also have a few economic data points coming out from Europe as well. So lots to consider moving forward over the coming days. And then obviously with midterms and the inevitable FOMC meeting coming at the beginning of November, there's going to be lots of action packed into this market in such a short span of a few weeks as we get the next level of guidance to progress us forward. That's it for today's video. Please give this video a big like down below, and we'll see you